And if it's working, uh, I can show a tax form or whatever using this Almo. Now, I also could bring up, since I have the internet, I can bring up irs.gov and show them various tax forms in the tax class or any other form. And then, of course, uh, I have my jump drive that I have solutions on if I want to show them a solution. I have PowerPoint on it if I want to use PowerPoint as part of my lecture. And it's handy.
I use OneNote
And
primarily. I put the PowerPoint into OneNote where I can write on it, so I can pull the PowerPoint over to the side and do some calculations and so forth for them.
So you're using technology that's available as opposed to.
Yeah, this is OneNote, and I use it as my blackboard, what have you. So, and I can also bring up Word that lets you write in Word, same as OneNote.
Okay.
So it's pretty good. So I have Word, I have the Elmo, I have Solutions, PowerPoint, I have the Internet, and all that on this one little.
Do you have online classes?
Yeah.
Do you use the same technology for
Yeah,
your online classes?
yeah. See, what I do on the online is I just go ahead and do my lectures. They're static, of course. You know, they're not synchronous. And so I'll go ahead and but I try to keep the lectures to about 30 minutes or less. Small bites.
If I do a lecture today in taxes, I've got the same class next year. I'm on the same page. YouTube has my lecture saved. I can bring up the lecture from a year ago in case I can't be here.
Okay.
So
yeah, we have Integrity as a software, but sometimes Integrity and Blackboard. Some of these, I think you're using Microsoft and Google and Tandem and YouTube. Sometimes I think that's better than some of these packages that you can.
See, I dropped this, I guess the site, I drop it into Moodle.
Yeah, we got
Moodle. Okay.
My students at home, they bring up Moodle today, and I've already dropped it in there, and they look on tax class 3, 5, 19. They click on it, and they see me live.
Okay.
Or if they want to wait till Saturday and click on it, they can see me, but not live.
Okay.
So
yeah.
I like it better than I do full-blown web classes.
Okay. Yeah. I can see that.
Student has the option of being here or being there.
But we've got basically all the classrooms are set up this way.
You're welcome. Well, I think some of my students went down. I talked to a couple of my principals, so.
They did down there.
You have a good turnout, great.
Yeah, we did okay.
All right.
We both
All right. So anyway, I've already got that started for his benefit. It's time anyway. Been cold a few minutes. Hillary should text me and said she'll be here. I think Hillary, her husband had the one car. He had to be somewhere. She couldn't make it to one. She couldn't the other. What have you? All right, Jonathan he pretty good this morning. Kogo? Who talked to you to Okay. I talked one of my principal students in to make it down. I had a photographer in here, I guess for the college, my first county class today. And he stayed here a long time. He got pictures from every direction. Well, he didn't get my back too much because my shirt was hanging out. But he was in the back there taking pictures of my 6 back students. I said, these all 6 are from other countries. I said, except Millie, she's from the moon. So, but I had those 6 sitting those 4 back seats. And they're from Serbia, France, Spain, and Argentina. So 2 of them are from Spain, let's see. 2 are from Serbia, 2 from Spain, 1 from France, and 1 from Argentina. The one from Spain, he can go either way, French or Spain. His mother's Spanish, his daddy's French, He lives in Spain sometimes, and he lives in France sometimes, so he can go either way. His name's Carlos, I guess that would be the Spanish name, but it's not a French name. So, there's Mr. Cole. All right, I'm gonna give you all the options today. I have your test made up. I'm gonna give it to you today, one way or the other. It's 50 questions, true, false, multiple choice. Now, I think the questions on chapter 14 on credits, I think you're good to go on those. And I think the questions on accrual, inventory, principal residence, you're good to go. You know where to find it if you don't know the exact answer. That chapter on credits, when I just did a generic test, it put too many questions on there on AMT. I did not stress AMT. Most people don't fall into AMT taxes. Now, I've got one rental house, and I took a loss on it. If I had a gain on it, I'd have went into the AMT. But TurboTax would even compute AT&T, and I think this IRS tax program computes AMT, alternative minimum tax. That's if you owe $4,000, and you had a whole lot of depreciation or something, you may owe another $500. The $500 is called alternative minimum tax, so forth. So, but now here's your choice. Hillary's not here, she don't have a choice. I can give you the test today. What time do you have to leave here today, Cole? It's 20 to 1. What time do you have to? You don't work, so you can stay here till midnight. Okay, John.
A lot of class entries.
Oh, what time?
What two?
2? You have 2? All right, so you guys can stay to 2. That gives you an hour and 20 minutes. So, if you take the test today in class, if you all vote to do that, I'll give you 5 answers out of the 50 questions on the alternative minimum tax. That means you only have to calculate 45. Or if you want to vote to take it home, we'll look at some problems today in a couple of chapters, which Terry sent in all her problems. We look at some problems, you take it home, bring it back Thursday. So, how many of you would like to take it today and get it over with, and I'll give you 5 answers out of 50. Jonathan?
I don't have my book with me.
You don't have a book? Well,
I don't have
mine.
it with me.
You have your book, Helen. You have yours, Clay.
I got the online.
Well, you got it, you got yours, too. Jonathan, I've got my book. So, same question. You want it today, Jonathan, or bring it back Thursday?
I'm fine with either.
Helen,
I'd rather bring it back Thursday.
Clay,
That's fine, bring it back.
Thursday,
I have Dr. Bourne's ethics exam during the same time Thursday. Can I just drop my test off with you?
yeah, and I'll scan it,
Okay,
and then you drop back by the end of the class, see what you made.
okay.
Okay, now this is gonna be your only grade for midterm, so don't nobody, I've never had to turn in a D or an F for taxes midterm. And let's don't start a trend the other way. Okay,
Just jinxed us now.
yeah. Let me go ahead and give you this test. I'm probably still gonna give you a couple, 3 answers on alternative minimum tax. I didn't want that many questions on there. That was chapter 14. You remember, we went through the credits pretty fast. About the alternative minimum tax.
I don't have time. I need to sit down and figure out what I have left for graduation. I think I should be set to graduate in December. And if I am, I haven't got like less than a month to do my paperwork and
You gotta do
paperwork.
your paperwork, pay the fee, yeah. And
So
do
you'll let
a,
me know when you're
well, we
available.
need to do a 90-hour evaluation. Your accountancy or business administration account?
I don't know how, I think it's accounting.
I think she said it's 2014.
You what?
She said she was under the 2014.
Yeah.
Accountancy.
Well, we started some accountancy and also business administration with the county. John, I think you're a core accountancy owner.
I'm accountant.
And we did away with that brief period of time. A lot of people wanted it back. So what we'll do at the end of this period, are you in a hurry?
No,
We'll go down and get those sheets.
Okay.
From, Michelle. But you take them home and fill them out. Come down, let me review them. We'll see what you're gonna take this next fall and see if it's all. See if you have to take something.
if I've kept up with everything right, I should only need 4 classes and they should all be available. Should
Okay.
is the key word there.
We'll look. Though.
Okay, thank you.
Okay, did not mean to put that many alternative minimum tax on here, but let's look at a couple, 3 of them. I'll give you answers. Now, number 2, I'm gonna give you that answer. In case of married taxpayers, an individual may claim the section 121 exclusion, even if the individual spouse uses the exclusion within the past year. We would have to look up, see what that section 21, it's determined on individual basis. That section 121, I still want you to look it up, see what it is, but that answer is true. I'll give you a Scantron in a minute.
That's what I was gonna ask.
Yeah. Now, number 4, I won't give you all these AMT. Number 3 is easy to look up. Number 4, for purposes of the AMT only, the foreign tax credit and refundable personal credits are allowed to reduce the tentative minimum tax. Number 4, that answer is false. Why? The foreign tax credit and non-refundable personal credits, they do reduce the tentative minimum tax. What did number 4 say? Only the foreign tax credit and refundable credits are allowed to reduce. That word only makes it false. Okay, on that number 2, I'd like to look that up. Let's see. That's explained. An example 12-50. Chapter 12-50. Okay, now I'm going to do a couple. I'm going to do number 6, alternative minimum tax. Then see if you can do 7. Number 6, Jake and Christine are married and file a joint return for 2018. They have a taxable income of $100,000. Tax preference and adjustment of 20 for AMT. The regular tax liability is $13,879. What amount is their total tax liability? All right, I'm going to tell you that answer. Number 6 is C. Hill, you're just in time. Got all of you here today. Woo, well, you should have a party. Dance or do something. Hillary, I told him the answer to number 2. Please jot that down. The answer is true. Number 4, I think I told him the answer. The answer is false, right? Now, I'm doing 3 or 4 of these AMTs for you. Now, number 6, the regular tax liability is $13,879. Okay, $13,879. Guess what your answer is for number 6? It's $13,879. There was no alternative minimum tax. They had tax adjustments and preferences. And that would make the alternative minimum tax less than the regular, so you gotta pay the biggest of the two. They had to pay the regular tax. All right, so I'm gonna leave you with those three answers. Let's see. Two or three other questions on here. Number 8, I'm gonna give you the answer to that one too. Number 8, the answer is D. And why the AMT base exceeds 20% threshold. The limit was 191,500. That's in your book. So the excess will be taxed at 20% times 28, and that gives you 83,530. Okay, I won't go in and out and explain that. I didn't stress the alternative minimum tax that much for two reasons. Not many people ever reach that area where you have to do AMT. And if you do have a small AMT, it's calculated by tax program. Now let me get you a Scantron.
Let's see. 5 questions. Or did it get 5 right or miss 5? I was like, I did this time, so it only get 5 right. And I was like,
I have to run down and get some. I'll have one available. I'm gonna get those in a minute. All right. I feel like on the credits, we were okay, chapter 14. Now, Terry, you sent in answers, what, to 12? Chapter 11, 12?
Clue what I've done and what I haven't done.
You don't have no clue, and you did it? Well, Terry,
I have a checklist at home as to what I still have to do and working out what I've done, and because I'm spending 90% of my time at the nursing home with my grandpa.
all right, okay then. With your grandpa,
Yeah,
how old is he?
he'll be 89 on May 6th.
Yeah,
He had a massive stroke on New Year's Eve.
bless his heart. My dad, we put him in a nursing home about 87. He lasted 2 years and died at 89. But we put him in there. He wasn't totally disabled or anything. I think, I don't know, he had to be in a wheelchair, but he still went in that hospital at 87 chasing women. And they had to run him out of women's room and everything else. He was a card. So, and he had pretty good memory too. He wasn't Alzheimer's. He just chased women. Mom had been dead, I guess, for about 8 or 10 years. So anyway, page 32. Hillary, I want you to, Hillary, you and Terry, look up number 37.
what chapter is it?
Chapter 11. Now, this is accounting periods and so on. I want to review just a few problems.
What number, 36?
37. Jonathan, you and Cole look up number 38. And Cole, see what you can do with number 40. I mean, Clayton. All right, I'll run down and get some Scantrons. This is just reviews of those things that chapter. Good afternoon. Oh, that was last week. Oh, yeah. So, more at 11 o'clock. Three square.
I did a longer
Please get the walk across the code.
Oh, you need to. No, I just need to.
and live. I was wondering. Yeah, I was gonna say, I don't think we can.
And a lot of times it's going to. I mean, we have to. Could more read.
The same thing. Thursday, general.
It was very rare for me to look up the test questions last semester. I could Google, but it's Quizlet.
Yeah, that's why I want to take the test one.
Oh, my.
What happened? I think I found it. Oh, no, it's
If I knew it wouldn't take forever, I'd go up there and look answers up there,
you know,
but he'd be back in a minute. And he's still got that freaking camera.
it's on my pocket counting.
Yeah, but I mean, you can pull.
They got it. It's on the line. You got technical.
They're just not.
In this thing.
Yeah. And some of them, you can have some changes.
Sure, we don't have to have a top 5 or 3.
I'd say be like say probably 18. That's your system, dude.
Okay, sure will. Okay, let's look at these real quick. three, I asked you and, Hillary, for each of the following cases indicate whether the taxpayer has selected an allowable tax year as an initial year. If the year selected is not acceptable, indicate what is acceptable. Now, corporation selects January 1, January 15th to year end. Y'all find that acceptable? That would be 11 and a half month period.
Wouldn't be, would it?
All right, let's put a note on that one for temporary. All right, now B, a corporation selects March 31st as its year end. Hill, you think that's okay? Let's put a yes on that one. A corporation selects a year that ends on the last Friday in March. The last Friday in March every year. I think it would, but I may be corrected in a minute. The partnership selects a year that ends on December 31 and has three equal partners whose years ends on March the 31, April the 30th, and June the 30th.
I said acceptable on that one.
Said what?
Acceptable, because the three partners don't have the same
Right.
date.
Okay, and then the last one, a corporation, S corporation selects December. That's perfectly okay for an S corporation. So let's see what we. Oh, wait a minute, D, okay, the S corporation is acceptable, as I said. Okay, we decided that B and C was acceptable. All right, and A not. Year would have to end on the last day of the month, January 31st or December 31st. Not acceptable based on the least aggregate deferral of income to the partner. A March 31st tax year end would be required because you're never going to have that situation. You're never going to have a corporation that has three partners that have all these three different tax years. But in case, you have to figure it out. Okay. Number 38, Jonathan, what? Change in accounting period. Which of the following situation is a taxpayer permitted to change accounting period without approval? Did you got either A, B, C, or D? I mean, A, B, or C?
I thought all of them that they're not required to have it approved.
All right, to make it short, approval is not required in any of the situations. And you can change your accounting period. An accounting period is what we were talking about, number one, that the ladies had. All right, now 30, which one I gave you, Cole? 40? I mean, Clayton, 40?
Yeah, you got me.
All right. Lavanna, whatever her name is, a single taxpayer, is practicing accountant. She obtained permission to change her tax year from a calendar year to a year ending July 31st. Her practice income for the 7 months ending on July was at $38,500. In addition, she has $3,000 of interest income and $6,500 of itemized deductions. What is her tax for the short period? First off, Clayton didn't have time for him to calculate the taxes. But let me show you on this one, okay? You count her whole income of $38,500. Now, on her practice income, now interest was number 40. But what, okay, 3,000. Itemized deductions of what? All right. Now, her modified taxable income, if it were a normal year, is 35,000. We know that. itemized deductions for 2018, would she even want to itemize? Why? Because she gets how much? She gets 12,000. And y'all been doing a lot of taxes. A lot of them little senior citizens are over 65, aren't they? Well, they get 13,000 something standard deduction. Okay. All right. What happens here? All right. Now, how long was the 30? Where did the 38 something come from? Given and for 7 month ending. Now, if that was the salary for 7 months, all right. But take out the interest and itemized deductions. So the salary for 7 months is 35. Okay, now that's the same as dividing 35 by 5 sevenths. Wait a minute, 7 twelfths. 7 twelfths. Divide 35 by 7 twelfths. Somebody take 35 and divide it by 7 twelfths, see if that works. If you divide 35 by 7 twelfths, you're multiplying by 7 and dividing by 5. That should give you 60. Okay. So you're dividing by 7 twelfths. You end up multiplying by 12 sevenths by the rules of math. Okay. All right. Now, tax on annualized income is 9140. You'd look up the tax on 60,000 for a single person, those tables. All right. Gross tax then would be 7 twelfths of the 9140. So her tax would be 5332. Advice: don't change your tax year. Don't do a short tax year. Okay? There's hardly ever a need to do that. I don't know why she had the need to do this. Okay? All right. Now we're going to look at cash basis taxpayer. All right. And we're going to look at manufactured inventory. All right. Terry, take the first 3 on 41, and Hillary, take the last 2. All right. Jonathan, you and Cole, take all of number 43. And Clayton, see what you can be doing with number 45. Terry, are you in Costa County? Hillary, you're in Costa County? Terry, you can't be in TAC, but you can be in cost Thursday, right? I'm giving open book test in cost on Thursday. Probably haven't got to see the video yet.
Yeah, I can, yeah.
Open book test on cost, job order and process. And Jonathan, you're in Savannah, that's the only test y'all get for midterm. So I hope I don't have any bad grades for midterm in cost or taxes.
That starts at 11.
Yeah,
Yeah, I can do that.
but if anybody can get here at 10:30, I've got principal accounting class, but I can get you started in another room if you can come early. But okay, I don't know how much time you've had to look these up, but we've got to scan through a few of this chapter and scan through a few of the next. Cash-based expenses. How much of the following expenses are currently deductible for a cash basis tax? Medical expense costing $20 paid by credit card. Medical expense already exceed the 7.5% of the AGI floor. Huh. If it already exceeds 7.5%, you don't need that $20, do you? You wouldn't need it. But Jonathan, the big question is it paid if it's paid by credit card? Or Hillary? Or Terry, whoever had it, Terry.
By credit card, it's still considered cash.
It's still considered cash, okay. Prepaid expenses not relating to points of 200 on residential loan. Now, we paid interest of $200 on a residential loan. We prepaid it. Hillary, you think that would be deductible? Cash basis taxpayer? Residential loan sounds like a taxpayer anyway. It should be deducted. Now, the points is for the whole loan. Now, sometimes RS will let you take all the points if you paid $1,000 or $2,000. Sometimes you got to prorate them if it was not a loan origination fee. When I read that in the tax book, I want to say loan origination fee, original national fee, but it's origination fee. Put it together fast. All right, now let's see. All right, items B and D, Terry, we're answering yours for you, are not deductible. All right, now let's see why. A is correct on Terry's part. B, prepaid interest not related to points of 200 on a residential loan. I was assuming that $200 would happen during the year, and that would be at least for 2019 or whatever paid in advance. And it may be by the end of the year, but they're saying no because it's prepaid interest on a loan, a homeowner's loan. All right, so C, taxpayer borrows $300 from a bank to make a charitable donation. The $300 is paid to the charitable organization before the year ends. Yeah, you can deduct the charity. And D, taxpayer gives a note to his church indicating an intent to contribute. No, that's not a cash basis. E, a calendar year individual mails a check for $200 to his church December 31st. That is a donation. Now, back to giving the church a note for $200. Have any of you seen these TV, telethons, whatever, raising money for churches or some other organization? Or you may have a singing event and they take pledges. A pledge is not deductible. Doesn't mean people will carry through on their pledge, does it? So if you wrote out a check to honor that pledge before December 31st and mailed it, it's deductible. Okay. Now, inventory, that was Jonathan and Co. Okay. Is raw materials part of inventory in a manufacturer, Jonathan? All right. Is advertising? Think of cost accounting. Is advertising part of your inventory? Is period cost or product cost part of your inventory? What? Product cost. Advertising is period cost. All right. Payroll taxes for factory employees, is that part of your product cost? Yeah. It's at least overhead. All right. Research and development, experimental cost. Let's think about D. A is 100% yes. B is 100% no. C is 100% yes. Let's think about D. E, factory insurance, is 100% yes because it's overhead. F is 100% yes, it's repairs to factory equipment, it's overhead. G is 100% yes, and H is 100% yes. All right. Now I'm going by rules of cost accounting. If they're going by some other rule, I've missed them all. All right. All right. A, C, E, F, G. All right. Whereas B and D, whereas B and D, what was B? We said no on that one, didn't we? Okay. What is D? All right. I said put a question mark on that one. So they are going by the rules of cost accounting. Very good. All right. Okay, it didn't give us any reason why. Did not give us any reason. But I can just tell you one thing, they're period cost. They are period cost. Or in that one, experimental might be organizational cost. Now that brings us down to the hardest one, and Clayton, I know, didn't have time to finish it. And that's on an installment sale. A construction company sells a used crane to Go Construction for $80,000. The crane cost $900, is fully depreciated under Section 1245. It was fully depreciated, so it has zero basis. Now, Section 1245, we have to recapture Section 1231, Section 1245. There was a Section 50 on real estate. All right. Under Section 1245, depreciation recapture rules. The entire gain is taxable as ordinary income. Okay, we're good so far. Ace receives a down payment of $20,000 and is to receive $20,000 per year. Now, first off, plus 2% of it, plus interest of 8%, which is greater than the applicable federal rate. Compute the gain from the sale. Well, what was his basis? What was his basis, Clayton? Zero? And how much did he sell it for?
80,000.
I don't know. What did he sell it for? 80? So what's his gain, Clayton? It has to be 80. Okay. We've got to be calculating the same thing. What number is this thing anyway? Number. All right, so we're down to there. We're down to 80,000 gain. And that's the Section 1245 gain, which makes it ordinary gain and not long term. Now we'd have to sell it for over 900,000. If we sold it for $1 million, 900,000 would be ordinary Section 1245 gain. Then only 100,000 would be long term Section 1231 gain. All right, now look at the rest of the situation. All right, now look at B part. That is interesting. How much gain is taxable in the year of the sale? All of it. All right, we know how much gain is taxable in the year of the sale. All of it. It's going to get interest of 8%. Only the 8% interest will be taxable next year. Now, right now, I'm looking for a reason why. Your whole gain was your gross margin, and your whole gain was the same thing. Since it had zero basis, you must not be able to use the installment method. So he just pays taxes on all of it. Now, how many payments of 20,000 is he supposed to get? 4, 1 starting this year. Now, in ordinary circumstances on installment sale, he'd only pay taxes on 20,000 this year, 20 next, 20 next, 20 next. That'd be the installment method. But he had a zero basis then when it was sold. Now, then, if that be the case, I want you all to try to look at number 48. I want everybody to try to calculate number 48. Take a couple of minutes.